Welcome to the WTR Small-Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I'm being joined by Cale Moodie, CEO and co-founder of Neptune Digital Assets, OTCX, ticker symbol NPPTF, and TSXV, ticker symbol NDA. Neptune is a staking, Bitcoin mining, and blockchain infrastructure company founded in 2017. Also joining us is my equity research colleague, John Roy. Good morning, gentlemen, and thank you for joining today's podcast.
Hi, thanks for having me.
Cale, for those listeners that do not know Neptune Digital Assets, can you please provide a 30,000-foot overview of the company and its corporate strategy, as well as providing a high-level overview of your professional background?
Yeah, so I'm originally a gold bug. So I was back in the day, I was in resource-based companies, and being a gold bug and interested in scarce assets, sort of counter-inflationary assets. I read the white paper and learned about digital gold back in 2000, I'd say 2014. So I was pretty early to the game. At that point in time, we tried to take the company public, and it was pretty early at that point in time, 2014. We sort of got laughed off the out of the lawyer's office, and then we tried again in 2017 to take a Bitcoin trust public in Canada. That actually failed. We were called a novel asset class, and at the time there was no trust and no ETFs happening. And fast forward to late 2017 is when we started Neptune Digital Assets. So we decided we would find a cryptocurrency that worked for us, and we could build an operating business around that. And we actually started in 2017, and then we IPO'd the company in 2018. And I've been at it ever since.
You just reinforced the benefits of being a reader and a lifelong learner.
There you go.
With that, I'll turn it over to John Roy.
Great, thanks, Tim. So obviously you guys got started around 2018 as one of the first blockchain companies that was actually listed. Can you tell us how the kind of approach and core mission have evolved since then?
Yeah, it's evolved tremendously since then. So initially, we wanted to be an operating company because our whole idea of becoming a Bitcoin trust got shot down by the Ontario Securities Commission. Again, being considered a novel asset class, we sort of got laughed out of that boardroom as well after spending a lot of money on lawyers. So we said, okay, well, let's look at the top 5 cryptocurrencies in terms of market cap. And oddly enough, there's this one called Dash, and Dash had this proof of stake ecosystem, whereas you could buy Dash, stake the Dash, and earn yields. And that was sort of our foray into staking. So that didn't work out, and fast forward to today where you have all these treasury companies and everybody's creating public companies around one cryptocurrency. Well, I wouldn't do that. I think it's highly risky, but it works in a bull market. For us, that sort of died when we entered the bear market in 2018. We IPO'd in 2018. We raised $20 million, bought Dash, and watched the market sort of implode. But luckily, we raised some money and got into the space. So over the next 2 years of bear cycle, we sort of diversified into other proof of stake tokens, Cosmos Atom being one of them, and a number of others. And then we said, hey, let's just start building up our Bitcoin treasury. We know Bitcoin is the one holy grail here. We believe in Bitcoin long term. These other cryptocurrencies, we don't know for sure they have a future. They may not. And so that was sort of our start in terms of proof of stake and build that Bitcoin treasury asset.
Now, a lot of crypto companies, as you've mentioned, are really kind of staying in one lane, i.e. one coin.
Yeah.
You do Bitcoin mining, staking as well. You have node infrastructure. You're in, distributed finance. So there's a variety of different things you're doing. How do you balance those, and how does that really differentiate you from the guys that are in one lane?
Yeah. So I would say we're super unique in that sense, and it's interesting, and no one is actually really doing what we're doing. So we call ourselves a Bitcoin miner, but we're using traditional mining too. We have a very, very tiny micro operation of actual traditional Bitcoin mining, which is in Colorado, where we host some rigs, and we've been doing that for years now. But that's just sort of our DCA on a regular basis through traditional means. Secondly, we have our proof of stake mining. So we call that sort of proprietary staking and Bitcoin mining engine. So, the interesting thing with that is that your CapEx is a one-time event. So you spend your CapEx, you buy these tokens, you stake them. You don't have obsolescence, you don't have maintenance, you don't have hardware, you don't have utility issues and power generation, that sort of thing. So you stake these assets, and these assets grow over time. And then we can take those yields, and the yields, we take those and we buy more Bitcoin. And so the big question mark and the big sort of secret sauce, I guess you could say, is how do we do that? And when are we selling those tokens, and how are we flipping them? And what's the ideal ratio of proof of stake tokens? And that's sort of our proprietary blend. That's always changing and shifting. And that allows us to acquire more Bitcoin over time.
So one way to describe it is that's kind of the secret sauce, right?
Yes, exactly.
All right.
And how we're rebalancing that portfolio all the time.
Right. Now, one of the things I've heard you describe your goals as increasing value with the proof of stake ecosystem and growing its Bitcoin treasury, which is essentially what you just described. So
Yeah.
do those complement each other? Are those anti-complementary? How does those two fit together?
Well, I would say we're long-term long Bitcoin, but we're not long-term long all altcoins. So that's how they sort of differentiate. They complement each other in that we can piggyback off certain altcoins. Some of them may have a future, some of them don't. But we try and get in opportune moments, usually when people hate everything crypto related. And then we try and get out of those and diversify and back into Bitcoin and maybe even some cash. We haven't done that before, but maybe into cash sometimes for opportune moments to get that over to Bitcoin eventually. So for example, maybe we have a big chunk of Solana that we want to get out, and Solana runs to $600. We get out of some of that, but we don't want to necessarily think it's the best time to flip that over into Bitcoin. So we may take that and move it into cash, and somewhere down the line into the bear cycle, we may flip that back into Bitcoin. Usually what we do is we just take those revenues and go directly into Bitcoin. But actually the ratios are so terrible right now. We've just not seen an alt season. So this cycle has been actually really different and sort of thrown us for a loop. And we've been looking at things and judging how we adapt to that, because it's obviously been an interesting and unique cycle this round.
Yeah, a lot of the cycle has to do with the staking side of the equation rather than the mining side. So
Yeah.
now you support a number of major blockchains: Ethereum, Solana, Atom. So
Yeah.
which of those kind of staking side coins are really driving the highest yields right now? And which of those are more strategic in your mind?
I'd say ETH is more strategic. I've never been a big fan of ETH, but I think it is strategic because it has a place in the crypto sphere. And going forward, I think it's just the original for dApps and smart contracts. So ETH plays a part there, but the yields are very low on ETH. So Solana is a little bit better at maybe 7.5%. And we have obviously a big bag of Solana. We got in really early. We actually acquired some distressed assets from Galaxy at I think about $64 Solana token. So that was a pretty good strategic acquisition. So Solana is paying 7 to 8%. So that's a nice yield for us. And Atom is anywhere from 13 to 16%. So it's a great yield, but the coin has actually been depreciating. I think it's at its all-time low or pretty close to it. So we're hoping for better days ahead for Atom. But again, it's been really good to us over the years, given that we got in so early. That CapEx cost for us on that initial investment into alts was so long ago that now we're in profits anyways.
Right. One of the things I hear investors talking about is these different lanes, i.e., the different coins, and they're kind of perceiving that there's going to be maybe one winner in each lane. Fast, gold alternative, things like that.
Yeah.
Is that the way you perceive it as well, or do you perceive that could have multiple winners in each lane?
I think you can have multiple winners, and I think every cycle is sort of different. Last cycle it was the DeFi tokens that was a really big one. This cycle it's AI and some dApp stuff, but I'm hoping DeFi comes back with a vengeance, and I expect it probably will as it sort of grows. But yeah, every cycle has its focus and its hot new thing. And I think we'll always see that going forward unless the cycle's changed. And it looks like we are seeing a different cycle this time, a long extended lack of an alt season, and the volatility sort of fallen out. So it'll be interesting to see for sure.
Yeah, certainly, in the US, we got the Genius Act that kind of
Yeah,
stimulated a bit of a run there. They're talking about, even with the government shutdown, they're going to pass something in 2026. So we'll see
yeah.
if we get another, kind of fundamental shift or not. Now, one of the things you've consistently talked about is net income positive, which is certainly rare among the crypto space.
Mhm.
What operational efficiencies or disciplines have really helped you sustain profitability through the markets?
Yeah, I mean, certainly having a low op cost is a big one. So, I mean, we're a tiny company with a tiny team. We, we're basically fund-like, you could say. So to manage a fund, you don't really need that many people. So there's really only 3 or 4 of us on the staff, and so it brings our costs down in a big way. So we don't have an office. We don't have data centers. We don't have any of these large cost centers. So it's really easy for us to keep our op costs low, our G&A low. Really, our biggest cost is going to be power of hosting. So that hosting bill every month, but we still make a profit on our Bitcoin mining, so that's great. And then we have these tokens that appreciate and drive more revenues. So the revenues, of course, are valued at when those coins are earned. So it's a little bit tricky with financials and US GAAP and IFRS, because you have to value the things that when they're earned and then market to market. So if we're in an appreciating environment, we're going to have a nice net income number, obviously. And so in a depreciating environment, you're still going to see big losses, just because you're marketing it to market of obviously the tokens that are depreciating in value. So that's always a tough one. The bear cycles are always tough, but usually no one's paying attention by that point. Everybody's already out.
Speaking of cycles, let's
Yeah,
look at Neptune's top line growth catalyst, let's say over the next 12 to 24 months. I mean,
yeah.
is it new networks? Is it increased staking, uh, distributed finance more, Bitcoin? I mean, just raw Bitcoin appreciation.
Yeah,
What are the kind of things you're looking at for the next 12 to 24 month catalyst?
yeah, it's been a little bit of everything. Obviously, we want to grow and grow our staking operation. So that's a big one for us. So at some point in time, we're going to want to raise money. We have this line of credit with Signum Bank. I'm not sure if you saw that in the news, but we do have a 25 million US line with Signum, which is great. We're not forced to raise money. So we can, but we don't want to. We think our share price is too low to do that. So we'll keep tapping into our line of credit, which is easy for us to do. And it's, again, low cost of capital, low interest rate. In fact, probably doing a traditional PP is a higher cost of capital. So that makes a lot of sense. So scaling our staking operations is one. Obviously, the appreciation of Bitcoin is another. That's great. We're always DCAing, so we're always buying, we're always mining, and we always have these staking revenues that, if we decide to, we could sort of dump those into Bitcoin each month. But we're trying to be strategic, just because we're not in alt season yet, and we do believe that will come at some point in time. So all these sort of avenues drive our growing Bitcoin treasury, rather than having a cash treasury.
Got it. So kind of maybe taking half a step back. So if investors looking to compare Neptune to other, say, public crypto companies, what is your core differentiation?
Yeah, I would say it's a highly diversified strategy, rather than focusing on one token. You know, because really these days you could go out, you can say, hey, I want Solana exposure. Okay, well, you can buy one company, that's great. Eventually there'll be ETFs. We can buy Solana ETF. We can buy an ETH ETF. We can buy a Bitcoin ETF. And I think that's the route it's going to go. So I would say that we are a diversified exposure company. So not only do you have your Bitcoin mining in there, you have your regular DCAing, you also have a number of proof of stake tokens that are earning all the time and driving those revenues as well. So if you believe in the alts as well, that's great. And we also have a little side private deals like SpaceX there. That's the only one actually, but we thought that was pretty exciting, and so we added that opportunity to to investors who don't get exposure to those highly technologically advanced companies that you just can't access. So that was a pretty neat one.
Cool. So maybe my final question is essentially, what is your message to investors who are maybe new to blockchain and are looking really for credible, diversified ways to gain exposure?
Yeah, I would say that, hey, we aren't a flash in the pan. We've been at this as long as anybody has in the space since 2017. We're going to be here many years to come. We're only going to be growing. And if you want diversified exposure to the entire space with a little bit of extra in the SpaceX, we're probably one of the best buys on the market.
Off to you, Tim.
Thanks, John. Thank you for joining us today, Cale Moodie, CEO and co-founder of Neptune Digital Assets. Again, OTCQX ticker symbol NPPTF and TSXV ticker symbol NDA. And thanks to my equity research colleague, John Roy, for also joining us today. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.